How do we know if it's going with the flow of order flow? Well, put a moving average on the charts, for God's sake. Anything, it doesn't make any difference. So long as it's something you can look at and say, right, it's green. So I want to try and find any trade that has red above purple and blue. That's as simple as it gets. That really is as simple as it gets. So what color is the moving average? Green. So I want to find any trade that has red above the purple or blue, right? So that's how I trade with the flow of money. So where else do I see red above purple and blue? Well, I see it kind of happening in here. So that might be an opportunity for me to buy into there. I can see it definitely happening in here, very definitely happening in there. So these are all possible add-in trades in terms of going with the flow. Now, if it's on a downtick, so much more the better, because obviously that allows you to actually go with the momentum as well. If it's on an uptick, you've got to be careful to make sure you still ask and demand to see the leans before you trade. There's another opportunity, not here because the red line's rising slower than the purple line, so that's not a trade. That's not a trade. That's not a trade. That's not a trade. That's starting to become a trade again here because of the acceleration in the purple line. So that is a continuation short right there. This is a possible trade, but against the direction, remember. The better trade in terms of momentum is to go with this trade here. This trade here, the red line is lagging the speed of the purple and the blue again. Red line's lagging behind the speed of the purple and the blue. These are good sells. So when we look at good sells in the red line, good buys on the actual oil. So when we look at those momentum trades, there's one just happened on the right-hand edge there. Whilst we've been looking at this, and there's the trade, but again, that's a fade trade in the direction of the trend. You can see we're not trying to find the bottom edge. We can spot the bottom edge because we can see, for example, during this period here, there's most definitely a profit take phase. And it's a profit take. We don't take the swing sell. We don't try and fade the sell, perhaps, unless we get a massive, enormous surge of volumes. We don't fade the sell. We're talking about selling the red line. It's a buy in oil always. So when we look at the oil price and we say, well, these are all possible buy trades, take a look at what happens in these areas. Possible buy trade, big pin rejection. Possible buy trade, big pin rejection, red candle. Red candle, possible buy trade, momentum shift towards that top edge sweep. Trying to jam these guys into play here. And then a profit take. See the profit take, where the profit take was? Almost perfect. You say, okay. And then you buy straight back in again. You buy straight back in. Now, are these not easier trades? Do these not feel intuitively different from the types of trades you're taking? Because these are all trying to put under the seller under a lot of pressure, right? And you can see that the takeaway from those trades, eventually the value runs dry. Eventually you start seeing, for example, this situation happening here. The continuation big. And now what causes that change? This enormous surge in volume. So all of a sudden you start to recognize what that surge in volume means. The surge in volume that comes in these three candles here. The takeaway volume, the enormous takeaway volume there starts putting us into this position of saying, is this the end of the move? Well, if it is, I'm not going to go momentum sells anymore on the red line. I'm going to go for fade sells on the red line. So you're going to wait for that kind of candle there before you do any business. And when the red line breaks below here against the purple line on the short term there, you see that change there? You say, well, I could actually start working this as a short trade now. I could start going into this narrative here as a short trade because I'm seeing a top edge and I've seen the volume, the climactic type volume that might give me the top edge short. And I can start working into this. Now, obviously, that's changed just in the most recent minute. You can see there's been a big flip of value just there. And you're going back in for the squeeze again, for the top edge. You're going back in for the squeeze. So you can see how you can play this in different ways. And it's not all about fading trades. So there was the sell trade just there. There was your short trade just there. And then you're back in for the buy side squeeze just there off the what looks like obviously the spring trade. And that's you obviously trying to go after that top line again. But you can see every single one of these trades in the direction of the moving average. Life is gloriously easy during that period. This is where you can do moonshots. This is where you can add to winners. The trade that Charlie D mentioned was the mark of a great trader, was the ability to buy into a winning move because of your confidence. Buying at lower prices seems intuitively to be the easiest thing, but the reason why they're low is because whatever you're buying is not well valued. The true leading traders of the world know how to buy at higher prices into supply. When you think about that for a second, you start recognizing what Charlie D was talking about, the ability to add to a winner at higher prices if you're a buyer, the ability to add to a winning trade, and then start reading the tape as it goes from there. This confidence allows you to make these big moonshot swings that fading will never allow you to do, because you're fading a top edge. You're never in the swing itself. You're always fading against a swing and hoping that your sell is the beginning of the end of the top edge and it's not just a pause. And that way you can get into a big swing. But these guys make money nearly always. The guys that join the trend, and if you use a trend line or a moving average, some sort of moving average, or pretty much anything, just to say, I want to be in this as a long trade as much as I possibly can do. You start looking purely for the long opportunities. So whilst this is green, you want to try and be long. If you sell it, you know you're in trouble. You know you're going to be struggling. You know it's going to be tough. You can still sell it, but at least you're recognizing what trade you should try and be in as part of a swing trader.